Hi everyone, this is a technical analysis on gold. Let's start with some fundamental background first. Gold is consolidating right around the key trend line as the market awaits the US NFP and Essential Services PMI reports. We got a spike on Wednesday as the Fed was pretty dovish compared to the hawkish expectations leading into the event. Since it didn't change anything on the macro side, the market faded the reaction as the data continues to be what really matters. Now on the daily chart, we can see that gold recently fell below this key trend line that was defining the bullish momentum that started from the lows around the 2000 level. From a risk management perspective, the buyers will have a much better risk to reward setup around the 2150 level here, but there's also another major trend line for confluence. That looks like a stretch at the moment, but if the US data continues to run strong, we should see a major correction. On the 1 hour chart, we can see that the price recently broke below this bearish flag to the downside, increasing the bearish momentum as the sellers piled in more aggressively. Technically, the measured target stands around the 2220 level. We can notice that the sellers continue to lean on this trend line here, as that's a good level to structure short positions with a defined risk just above it. A break above this trend line should see the buyers stepping in with more conviction and lead to a rally into this 2352 high. That level will likely be the last line of defense for the sellers, as a break to the upside should technically invalidate the bearish trend. Today we have the US NFP and the SM Services PMI on the agenda. For the NFP, the main focus should be on the average hourly earnings, as strong figures will likely trigger a hawkish reaction from the market and send gold prices lower. In case we see very weak employment numbers, with the unemployment rate jumping to something like 4%, then the market might ignore the stronger wage growth figures and lead to a rally in gold. For the SM Services PMI, the main focus should be on the prices and employment components. We got a strong dovish reaction last time when the prices index dropped to the lowest level in 4 years. If we get another drop, or at least not a big change from the current levels, then the market might take that as good news for inflation, and even if the headline number beats, it could lead to falling treasury yields and rising gold prices in the short term.